Welcome the kinetic event that we have been warning about for months just happened. A United States submarine just sank an Iranian warship in the Indian Ocean, sending global markets into absolute full panic mode and causing spot silver to violently skyrocket to $84.50 in a matter of hours. This is not a drill. This is not a correction. This is not a pullback. This is the beginning of the energy hyperinflation cycle that is going to destroy fiat currencies and force the global financial system into a stagflationary nightmare that central banks cannot control. The Strait of Hormuz is now a war zone. Oil tankers cannot move. Shipping lanes are blocked. And the industrial world is pricing in crude oil rapidly hitting $150 a barrel. When oil goes to $150, when energy costs triple from current levels, the entire cost structure of the global economy breaks. And when that happens, when the central banks are paralyzed between collapsing growth and exploding inflation, the only assets that survive are physical hard assets that cannot be printed. Gold survives. Silver survives. Fiat currency burns. The suits want me to tell you this is not financial advice, and they are absolutely correct. This is not financial advice. This is a war bulletin explaining how kinetic military conflict in the Middle East is about to cause the greatest wealth destruction event in modern financial history for anyone holding paper assets. Let me know in the comments below right now, because as this geopolitical nightmare unfolds today, as we watch oil spike and silver break out and the stock market crater, I need to know where this community is positioned. Are you holding melting fiat currency right now? Are you holding dollars in a bank account or treasury bonds or cash positions that are losing purchasing power by the hour as this energy shock accelerates? Or are you holding physical silver? Are you holding tangible hard assets that are going to preserve and multiply your wealth as the paper system collapses? Drop a comment right now. Tell me what you were holding. Tell me if you understand that the rules of the game just changed. Because a U.S. submarine sinking an Iranian warship is not a market event. This is a war event. And wars destroy currencies. Wars create hyperinflation. Wars force capital into physical assets. If you are not positioned correctly right now, if you are still trusting the paper system, you are about to learn a very expensive lesson about what happens to fiat money during wartime. Now, let me break down the chain reaction that is unfolding right now. And I want you to understand that this is not complicated. This is basic cause and effect. But the mainstream financial media is not going to explain this to you, because if they explain it, if they actually connect the dots between the military conflict and the economic collapse, there will be mass panic. So let me connect the dots for you. A U.S. submarine just sank an Iranian warship. This is a massive escalation. This is the United States and Iran in direct kinetic military conflict. Iran is not going to let this stand. Iran is going to retaliate. And the way Iran retaliates is by closing the Strait of Hormuz to all shipping traffic. The Strait of Hormuz is the single most important oil choke point on the planet. 20% of the world's oil supply flows through that strait every single day. Millions of crude oil. Tankers from Saudi Arabia, from Kuwait, from the UAE, from Qatar, all of them have to pass through the Strait of Hormuz to reach global markets. When Iran closes that strait, when they mine the waters or threaten to sink any tanker that tries to pass through, the global oil supply gets cut by 20% overnight. That is not a gradual reduction. That is not a slow decline. That is an immediate shock to the system. And what happens when you remove 20% of the global oil supply while demand stays constant? The price explodes. Oil is currently trading around $75 to $80 a barrel. When the Strait of Hormuz closes, when those millions of barrels per day stop flowing, oil is going to spike to $100, then $125, then $150. And it is not going to stop at $150 because the shortage is not going to be resolved quickly. You cannot just open an alternative supply source. You cannot drill new wells fast enough. You cannot build new pipelines in a matter of weeks. The oil that flows through the Strait of Hormuz is critical to the global economy. And when it stops flowing, the world runs out of oil. Now let me explain what happens to the economy when oil hits $150 a barrel. Everything that requires energy to produce becomes more expensive. Everything that requires transportation becomes more expensive. Everything that requires petroleum products as inputs becomes more expensive. Food gets more expensive because farming requires diesel fuel. Manufacturing gets more expensive because factories require electricity and natural gas. Transportation gets more expensive because trucks and ships and planes require fuel. Plastics get more expensive because plastics are made from petroleum. Chemicals get more expensive. Construction materials get more expensive. Everything in the industrial economy is directly or indirectly tied to the cost of energy. So when oil goes from $75 to $150, when energy costs double, the entire cost structure of the global economy shifts higher. This is not monetary inflation caused by central banks printing too much money. This is real, physical, supply-side inflation caused by a shortage of actual energy molecules. You cannot print oil. You cannot create oil out of thin air with monetary policy. Oil is a physical commodity that has to be extracted from the ground, refined, and transported. And when the supply gets cut by 20%, because of a war in the Middle East, the price goes up.
And there is nothing the Federal Reserve or the European Central Bank or any other central bank can do to stop it. This is the stagflation nightmare. This is the scenario that central bankers fear more than anything else because it puts them in an impossible position. On one hand, you have inflation spiraling out of control because energy costs are spiking. Food prices are rising. Transportation costs are rising. Everything is getting more expensive. Normally, when you have inflation, central banks raise interest rates to cool down the economy and bring prices back under control. But here's the problem. The economy is not overheating. The economy is not overheating too fast. The economy is actually contracting because high energy costs are destroying demand. Businesses are shutting down because they cannot afford to operate when diesel costs $100 a barrel equivalent. Consumers are cutting back on spending because they are getting crushed by food and gas prices. The economy is slowing down, potentially heading into recession while inflation is accelerating. So what do central banks do? If they raise interest rates to fight inflation, they make the recession worse. They kill what is left of economic growth. They cause mass unemployment. But if they lower interest rates to stimulate the economy, they make the inflation worse. They debase the currency even faster. They destroy purchasing power. They are trapped. They are trapped. There's no good option. And this is why during stagflation, this is why during periods of high inflation and low growth caused by energy shocks, fiat currencies collapse. Because the central banks cannot fix the problem. They cannot print more oil. They cannot lower energy costs with monetary policy. All they can do is print more money, which makes the currency worth less, which makes the inflation worse, which creates a death spiral that ends with hyperinflation and currency collapse. And this is exactly what is happening right now in March of 2026. The U.S. submarine sinking the Iranian warship just guaranteed that the Strait of Hormuz is going to be closed or severely disrupted for an extended period. Oil is going to $150. Energy costs are going to spike. Inflation is going to accelerate. Economic growth is going to collapse, and the Federal Reserve is going to be completely powerless to stop it. They're going to try to print their way out. They're going to try to inject liquidity into the markets to prevent a financial crisis. But all that is going to do is debase the dollar faster. All that is going to do is drive more capital out of fiat currency and into hard assets. And this is why silver just spiked to $84.50. This is why gold is hitting new all-time highs. This is why commodities across the board are rallying. The market is looking at the geopolitical situation, looking at the oil shock that is coming, looking at the stagflation nightmare that is unfolding, and the market is screaming, get out of fiat currency and into physical assets. Because you cannot print silver. You cannot create silver out of thin air with a printing press. Silver is a physical metal that has to be mined from the ground. And just like oil, just like every other physical commodity, when demand surges and supply is constrained, the price goes up. But here's what makes silver even more explosive than oil in this environment. Silver is not just an industrial metal. Silver is a monetary metal. Silver has been money for 5,000 years. When currencies collapse, when hyperinflation destroys purchasing power, people flee into silver and gold because they are the only forms of money that cannot be debased by governments. And right now, we are watching the early stages of a currency collapse. The dollar is losing purchasing power. The euro is losing purchasing power. Every fiat currency on the planet is being debased to finance government spending, to bail out banks, to fund wars. And the only escape is physical precious metals. The mainstream financial news is not going to explain how this war directly destroys your purchasing power, because if they explain it, if they actually tell you the truth about what happens to fiat currencies during wartime energy shocks, everyone would panic and rush into physical assets, and the system would collapse immediately. So they keep you calm. They tell you it is just a temporary spike. They tell you the markets will stabilize. They tell you to stay invested in stocks and bonds. But they are lying to you. They are lying because they work for the same financial institutions that are desperately trying to prevent a mass exodus out of the paper system. If this independent macroeconomic research helps you understand the real connection between kinetic war, energy shocks, and currency collapse, if it helps you protect your family's wealth by getting positioned in physical assets before oil hits $150, then consider hitting that super thanks button below to support the channel. This is how I fund this work. This is how I stay independent from the Wall Street narrative. Now let me give you the action plan, because understanding the problem is only useful if you know what to do about it. The $84.50 silver spike today is just the beginning of the energy hyperinflation cycle. We are in the early innings of this crisis. Oil has not hit 150 yet. The Strait of Hormuz is not fully closed yet. The economic impact has not fully materialized yet. But it is coming. It is mathematically certain. When you cut 20% of the global oil supply, when you double energy costs, the ripple effects through the economy are catastrophic and unavoidable. And here is what is going to happen as this crisis unfolds. There is going to be a desperate rush out of the fiat dollar and into anything real. People are going to try to convert their paper wealth into physical assets. They are going to try to buy gold. They are going to try to buy silver.
They're going to try to buy real estate, commodities, anything that holds value when currencies collapse. But here is the problem. Most people are going to wait too long. They're going to wait for confirmation. They're going to wait for the mainstream media to tell them it is time to protect themselves. And by the time that happens, by the time Bloomberg and CNBC finally admit that we are in a currency crisis, it will be too late. The premiums on physical silver will be astronomical. Dealers will be sold out. You will not be able to get metal at any reasonable price. This is happening right now. Silver just spiked to $84.50, but go try to buy physical silver from a dealer at $84.50. You cannot. The premiums are already $6 to $10 over spot, depending on what product you are buying. That premium is going to get worse. As this crisis accelerates, as more people wake up to what is happening, the physical premiums are going to explode. You might see spot silver at $90 while dealers are charging $110 or $120 for physical delivery. And that gap is going to keep widening because the paper market and the physical market are going to completely disconnect. The paper market, the futures market, the ETF market, those are all based on the assumption that most people will settle in cash and not demand physical delivery. But when you have a war-driven energy shock, when you have stagflation destroying currencies, everyone wants physical. Everyone wants the metal. And there is not enough metal to satisfy that demand at the current paper price. So the physical price goes vertical while the paper price lags behind, and eventually the paper market becomes irrelevant because nobody trusts it anymore. You need to secure physical wealth before oil hits $150 and completely breaks the supply chains. Because when oil hits $150, when energy costs triple, the global supply chain is going to seize up. Trucks are going to stop moving because diesel is too expensive. Ships are going to anchor because bunker fuel is too expensive. Refineries are going to operate at reduced capacity. And suddenly, getting physical silver delivered is not just expensive, it is impossible. The metal exists somewhere, but you cannot get it to your door because the transportation system is broken down. This is not theoretical. This happened during the COVID crisis in 2020. Silver dropped to $12 on paper, but you could not buy physical silver anywhere because the refineries were shut down and the transportation networks were disrupted. The same thing is going to happen during an energy crisis, except worse, because an energy crisis directly impacts the ability to move physical goods. If diesel costs too much, trucks do not run. If trucks do not run, silver does not get delivered. And if you waited until that point to try to acquire physical metal, you are not getting it. As this crisis unfolds, we are living through the most important geopolitical and economic event of our generation. The decisions you make in the next few weeks are going to determine your financial outcome for the next decade. This is not hyperbole. This is not fear-mongering. This is the reality of what happens when a major war breaks out in the Middle East and cuts off 20% of the global oil supply. Make sure you are subscribed to this channel with the bell notification turned on, because when oil breaks $100, when it breaks $125, when the Strait of Hormuz officially closes, when the next major kinetic event happens, I am going to be putting out emergency updates immediately. You need to be positioned before those events happen. You cannot wait for confirmation. You have to act on the information that is available right now. Here is the bottom line, and this is the lesson that history teaches us every single time. Fortunes are made and lost during wartime volatility. The people who understand what is happening, who position themselves in physical hard assets before the crisis fully materializes, those people become generational wealthy. The people who wait, who hesitate, who trust the paper system, who believe the mainstream media narrative that everything is going to be fine, those people get destroyed. Their savings get inflated away. Their purchasing power evaporates. Their wealth transfers to the people who are smart enough to move into physical assets early. Right now, today, in March of 2026, we are at that inflection point. Silver just spiked to $84.50 on the news of a U.S. submarine sinking an Iranian warship. That is the market telling you that the energy shock is real, that the war is real, that the currency crisis is coming. Do you listen to that signal and act, or do you ignore it and hope for the best? Because hoping for the best is not a strategy. Hoping that the war does not escalate, hoping that oil does not hit 150, hoping that the dollar does not collapse, that is not going to protect your wealth. The only thing that protects your wealth is owning physical assets that hold value when everything else is burning. I just posted exactly how I am positioning my physical portfolio for the $150 oil shock to my private insider community. I broke down my allocation between silver and gold. I explained which specific products I am buying and why. I showed the math on energy costs and how they translate to precious metals prices. I gave my timeline for when I expect oil to hit critical levels and what that means for the silver market. If you want to see exactly how Captain Silver is preparing for the wartime hyperinflation cycle, if you want access to the daily Strait of Hormuz tracking updates, if you want to be part of a community that understands how to profit from geopolitical chaos instead of getting destroyed by it, click the join button below and become an insider member right now. The people who join today are going to have front row seats to the greatest wealth transfer event in modern history. Do not let the energy shock catch you holding melting fiat currency. The war just started. The oil crisis is just beginning, and the flight to physical silver is accelerating past the point of no return. Make sure you are holding real wealth when the paper system burns. I will see you in the next video when we track the oil spike and update the silver breakout as this crisis unfolds.